Hello, friends. Jennifer here from the Corporate Canuck. And you know what? We're going to dive right in because today I want to talk about all things GST, HST, and the brutal mistakes that new business owners make. Let's go. Yes, you heard right. We're talking all things GST, HST today, everybody's favorite subject. But honestly, it's one of the areas that a lot of my clients have struggled with, even from seasoned business owners to people who are brand new. So it's an area that's really important to get clear on, and there's some really key big mistakes that people make. So let's dig in. GST, HST. And let's start off with what is it? So it's a sales and service tax. It's a tax we charge here in Canada. And now you'll hear it both ways, HST and GST, and I'll probably switch between both. It's essentially the same thing. It's just that in some provinces, the provincial sales tax has merged with the federal sales tax, and then we get this beautiful harmonized sales tax, HST, versus other provinces that have kept it separate. And so that's where you'll see GST and PST show up separately and applicable on different items. So the number one mistake that people make is not charging it when they should. So basically here in Canada, we have this threshold of $30,000 as a business owner, self-employed, contractor, incorporated, whatever business structure it is. When you hit that $30,000 threshold in a period of 12 months, so that's 4 consecutive quarters, once you've hit that, that's when that GST, HST kicks in and it becomes mandatory to start charging it on your eligible goods and services. So also part of that is figuring out, am I in an industry where I need to charge it? And a lot of businesses are. There's a few, like a handful of things like daycare or maybe grocery services where there are exemptions, but most small business owners that I work with in this entrepreneurial world do have to end up charging it at some point in time. So it's a really smart idea to keep on top of your financials. Figure out if you're going to hit that $30,000 mark and register and get started. And now something to remember too, as a self-employed person, sole proprietor, contractor, is that once you have a GST or HST number, it's actually tied to you as an individual. But remember that it's tied to you. So it is going to then apply to all of your self-employed activities. This is another area where people kind of get caught by surprise. So let's say I am a musician and maybe I make really cool t-shirts that I sell online. So you'd think two very different businesses, but if I'm registered for GST, HST, I need to charge it on all of those services. It's not just a GST, HST number for my musician business or for my t-shirt business. Nope, it's tied to me, the human, and therefore it's going to apply on anything that is eligible for GST, HST. We're going to move right along here, but before we do, if you're enjoying this video, please consider giving it a thumbs up and letting other small business owners know that this is great and useful content. And if you want a little bit more of that insider peek into how to run a fantastic small business, go ahead, hit that subscribe button, and you'll be notified of all our upcoming videos. Mistake number 2, not claiming credits. Now, we actually have a really cool system in Canada when it comes to sales taxes where we charge taxes that we need to on our eligible goods and services, so products or services we perform with our clients. We collect and hold that tax on behalf of the government, but then we're also able to claim taxes we spend on eligible business expenses. So let's say you send an invoice to a client. $100, you're registered for GST, which is 5%, so the total invoice is going to be $105. Send that off to the client, great. So you've got $100 and $5 that you charge in GST. And let's say you go shopping and you decide to go out and you buy a book, like mine. And let's say you look at your receipt and you were charged $2 in GST. So you paid $2 in GST on an expense. So when it comes time to work all of this out and do what's called our GST HST remittance, which is a report or a form, gonna wait for the sirens. So then when it comes time to send in your remittance, which is your GST HST report, You tell the government, I brought in $5 and charged $5 on GST, but I bought this thing, this book, I paid $2. So actually, I'm going to send you $3. $5 minus the $2. $5 we charge to our clients minus the $2 we pay on our expenses. Now that credit is called an ITC, or an input tax credit. And it's something that people miss. So they're just collecting and charging GST and they send it off without taking the time to review their expenses and figure out, maybe I have a credit here I can claim so I don't have to send as much money to the government. So the last big mistake people make with GST, HST, and it is a big, brutal one, spending it as if it's yours. And guess what? It's not. GST/HST is a tax collected on behalf of the federal government. And guess what? They expect to get it back. So if you are charging GST/HST on the regular, you have to make sure that you have a plan that you are not spending it as if it's part of your normal cash flow. And there's a couple ways that I can recommend to help with this. One is if you have see it, spend it syndrome, guilty. Meaning you see it in your bank account, you think it's yours, try setting up a separate bank account and just putting anything collected GST/HST in that bank account, and you don't touch it until you file that sales tax report. Now, a lot of business banks will actually give you a savings account for free or for a really low charge because you have a nice big checking or operating account. So make use of it. Squirrel away anything that's not yours to keep, like the GST/HST, and then it's there when you need it and you're not panicking when it comes time that report is actually due. Another thing a lot of my clients have found helpful is you can actually send in that GST/HST money at any time. So maybe this is a habit that you start now. You sit down at the end of the month, look at what came in terms of invoices or sales receipts. What did you actually charge in sales tax? And then you send that off to the government right away. And then as you get closer to the end of your reporting period, so for some businesses, that's every 3 months that you have to send in a GST/HST return. For a lot of businesses, it's up to a full year or calendar year. But as you get closer to that date, that's when you're going to start to really dive into things like those fabulous ITC, input tax credits, and actually figure out what the real balance is. But it's a great way to get ahead of things because here's the thing. If you're late filing those reports or late sending off that payment, there are some pretty big penalties. You're going to be charged interest and a failure to file. So you want to make sure that, again, that money is not yours to keep. You want to make sure it's getting into the hands of the people who want it. And trust me, they want it. So there you have it, 3 brutal mistakes that people make with GST/HST in their businesses. And hopefully you picked up a few tips and tricks to help you navigate that world and avoid those brutal mistakes. If you've enjoyed this video today, please consider giving it a like. It tells all those magical internet robots that this is a piece of useful content for other small business owners. Thanks for joining me today. I wish you all the best in your entrepreneurial adventures. And let's connect again soon. Bye for now.